I've been trading ICT for 5 years now, and I can tell you why so many people get it wrong. You are focused on too many things. Stick around to the end of the video, and I'm going to show you how after 5 years of trading, I only trade one type of candle now. This is part 2 to expansion theory. So you may be wondering, what am I waiting for, or what am I looking for in order to trade one candle? There are a few specifics to this that makes my trading way easier, okay? I'm looking for a key level to get hit and then a certain candle closure in order to trade the next candle, okay? Now, you've seen me speak about this before, but today I'm giving you a full model to be able to trade expansion theory. What is expansion theory? Expansion theory is the idea that the next candle should expand. Certain things in the previous candle tell us what this next candle will do. So, for example here, if I get rid of all of this and we just focus on this bit of price action, as you all know, there's a fair value gap here. A fair value gap which lines up with a breaker over here, okay? When we break below and we displace, creating the fair value gap, I want to see price hit a key level. What is the key level? Well, in this case, of course, it's the fair value gap. So we hit the fair value gap, coming into about 50% of it here. Now, what am I waiting for? I'm waiting for a swing high to form, or the start of a swing high, I should say. Okay, so you can see here, price takes out the candle's high into the fair value gap, and now we close inside this previous candle. So obviously the previous candle's range is this. Once we take out the high, we close inside the candle. The next candle should expand, and this is where expansion theory comes into play. My expansion theory says that the next candle or two should expand until we hit a key level, a key PD array, in this case a discount array, or a key pool of liquidity. So let's look left and see what we can aim for. Here we have a key pool of liquidity. Why is this a key pool of liquidity? Because it stands out, okay? If you look at this chart here, this looks like a market maker sell model. Where's an obvious pool of sell side liquidity? This swing low, because it has a high here, a swing low next to it, and a swing low the other side of it, creating this intermediate term low. So when we're breaking structure downwards with momentum, speed, creating fair value gaps, once we've outlined the logic, we can aim for intermediate term lows if we are bearish, okay? Now, to emphasize the other point, what else can we aim for? Discount arrays. If I get rid of this, where is a key discount array? You can see this fair value gap overlaps with this candle, so this makes this even higher probability. But there is also a discount array down here, a really large fair value gap that was created once we started expanding. So this becomes a level we can also aim for. So if we zoom back into here, remembering our key level is down here, once this candle closes inside this candle, we now can begin to expand. We know that we should expand until we, 1, clear out the sell side liquidity here, or 2, trade into the discount array down here. So once we get this candle, we know this candle will expand. And what does it give us? It gives us an open, a high, which is our Judas swing, a low, and a close. Where does this candle open? It just drops down, trades through the imbalance, and closes back inside the imbalance, okay? So these 2 days, Friday and Monday, are both tradable days. What do I do? How do I trade it? I drop down to the 1 hour, okay? Now, this is the daily fair value gap, okay? This is the previous day high that got swept. If I go back up to here and I show you this, okay? Once we zoom down, you can see the previous day high is this candle here. This gets swept, so we sweep the previous day high. And remember, we're in a key level because this level is our daily fair value gap. We then start to break lower, huge drop down, okay? Now, Remember, now that we know we are bearish and we've taken previous day high into a key level, we're looking for expansion theory to happen. So we mark up New York midnight. Now we want to see a Judas swing. And where is this Judas swing likely to come into? Well, once we're down here, you've got to see where we are in price. Is it likely? I will tell you right now, actually, it is not likely that we are to come back all the way up here and then drop lower, because expansion theory tells us the next candles should expand. So rather, what would be easier for the algorithm to do? Well, if you take a look here, we've got a high, a low, a higher high, and a lower low, because we've now broken the structure down here. This down close candle, and extend that out in time, you can see we have a breaker form, because we have a high, a low, and a higher high. Now, once we trade below this breaker, okay, we trade below it, now we can expect to redistribute inside of the breaker. So look where we start to sell off. We wick back into the breaker at a key time and then sell off from there, okay? And this all happens all from this candle closing inside of this one. Now, expansion theory, as I mentioned, this is quite key. We do not need to come back up into this area here because we are expanding towards a target, which means price is in a rush to get somewhere. The algorithm is in a rush to deliver sell-side liquidity because we want to punish as many sellers, or buyers I should say, as quickly as possible so they don't have time to realize they're offside. That's why the algorithm does this. Delivers to the daily imbalance we had down here, the daily discount array, and we've taken our trade here. Okay, so let me dive into some replay examples of this and show you exactly how we would trade expansion theory. Firstly on the daily, and then we'll drop down timeframes. So we are on the oil daily chart here, as you can see. Okay, and expansion theory works best when we're trading market maker models. I have found this market maker model by going over to the monthly chart, and you can see there's framework here. An order block, which swept up buy side liquidity, and then we traded away from it. We then traded back into the order block, and this candle closed inside of this candle, okay? But ignoring that, that is expansion theory in itself. This next candle should expand because we traded into a key level, and now this candle's body closed inside this candle's range. Okay, so this candle we would expect to abide by the terms of expansion theory. But if we drop into the daily time frame now, you can see we are in a market maker sell model, and you can see expansion theories happened a few times here. Okay, but what we are waiting for now is for it to happen again. We want these lows to be traded through because that is the final target. If we take a look to the left of the chart, right, we want to line up the order blocks on the buy side of the curve with the order blocks on the sell side of the curve. So we want, once these down close candles on the buy side of the curve are traded through, we want to see if we can redistribute price at these same areas. Okay, so once they're traded below, we should look for setups inside of them once we come back up to them. So let's wait for expansion theory to happen, and I will show you exactly what it looks like in real time. Okay, so if I skip forward here one candle, okay, you can see we take out sell side liquidity, but we close quite strong. What I would need to happen, especially since we're rejecting a daily fair value gap, is I would need a candle to close inside the last candle's body. Okay, especially considering we're in a key level. There you go. We got this candle's high taken out. So we swept up buy side liquidity, and this candle rejected and closed inside this range. The range being this low to this high. Okay, so this area here, we closed inside this area. What you would do now is, we've got our framework, okay? So we're working off the monthly chart, and now we've been breaking down lower. We've also, for the more advanced students, got a smart money reversal, low risk sell, a first level of distribution, and this is a second level of redistribution, okay? Because we don't need to come into this fair value gap because the mitigation block is here. We've got a mitigation block here, which is keeping price from coming into here. Especially now considering we've taken out the high, closed inside this candle's body. That is expansion theory 101. The next candle should expand, okay? So you would expect an open, a high, a low, and a close. And in my opinion, we should still expand because there's a nice pool of resting liquidity here and a daily imbalance. So now if we skip forward once again, I would expect us to expand into this fair value gap. Now, once we're inside this fair value gap, I would need more information, okay, to take a trade, just because this is a lot of expansion, okay, and we don't want to be selling inside of a discount. So let's forward once more, and you can see the next candle trades into the fair value gap. So what we've outlined here is we have the mitigation block, we have the candle anatomy, which if you haven't watched the video, please go back and watch that. It links in with expansion theory perfectly, okay? Candle anatomy tells us this is buy side liquidity swept into a key level and we closed inside the top half of this, right? That's a bit more information than you need, but that is candle anatomy, and my last video was on that. We then expect expansion theory, open, high, low, close, open, high, low, close. Look where we close, inside the fair value gap, okay? And now, because we've come so deep, we've had 3 days in a row of expansion downwards. Now we expect a retracement, okay? And that's exactly what we get. You can see this high gets taken. So you would now want some more information, okay? To tell us we're going to keep expanding towards this low now. If I get rid of this low now, we need more information. We've come back into the mitigation block, which is fine. But now I need to be sure that we're going down for that low. So let's forward, and now look what happens, okay? Again, let's outline what we've done. Mitigation block. We traded above an old high once with buy side liquidity here, and then we wait for a candle closure inside the last candle. Now we can anticipate expansion theory. Why did I wait for this candle, okay, to happen? Because we've come into a discount. If you look at this range here, okay, if I flip these around, if you look at this range here, you can see this fractal range, which took out sell side liquidity, came up and took out buy side liquidity. This is our dealing range. You can see once we traded into the discount fair value gap, now I'm anticipating a retracement. That is why I waited. Now we've come up back to equilibrium, which lines up with this mitigation block, above old highs, and we've had expansion theory 101 happen. Look now. We should, in theory, expand lower, and that's exactly what we do, and clear up the sell side liquidity below here. And again, we get an open, a high, a low, close, an open, a high, a low, close. These two candles right here, okay? If I go here, this one right there, and this one right here. These are the two easiest trading days you will ever find, okay? Let me repeat, the two easiest trading days you will ever find. All you need is the framework of candle anatomy and expansion theory. You need this framework, and these two trading days can make you a whole lot of money, okay? You can make a lot of money just trading these days. And again, remember how we trade them. New York midnight, Judas swing higher, okay? Look here. This is that day. Remember, we are now anticipating expansion theory happen. Is this not a fractal market maker sell model? So should we not also line up the down close candles on the buy side with the sell side of the curve? So why didn't this get mitigated, Loz? You see this? That's mitigation, okay? If I move this out of the way, and that's our previous day high, which got swept, okay? This is our mitigation block. Once traded through, what happens here? We trade through, come back up into it. At a key time where we want to see a rally up, we also respect this up close candle. Okay, we close above it, yes, but look, we reject from it. And then we expand lower. So you would be taking entries inside here. You could even drop down. And because this candle's body closed below this candle's body, this, we miss it, but this whole up close candle becomes your order block because we closed below that body. Okay, so you would be scouting entries in here, or you could even take just a sell above New York midnight, which is often what I do. I would take a sell there. You can even put your stop loss at the fair value gap. I would go above 50% and then aim for the original consolidation down here. The easiest 1 to 2.6 you will find, all from waiting for that first candle to create a swing high, waiting for it to close inside the last candle, waiting for the market maker sell or buy model to appear, and then we're trading the distribution or the reaccumulation. And it is that simple. The same will happen down here. Okay, I can almost guarantee it. This one, we run straight below, mitigate it, we then get a rally up, come into a fair value gap, and then drop lower, taking out the sell side liquidity, and dive in once more into what key level? The sell side liquidity below here. Now you would wait for more information, and you would wait for candle closures to happen to tell us if we're going to go higher or lower from here. You can see I have a key level marked up, but what I would need is more information. You can see right now we've had a lot of inside days. So did this candle take out this low and then close inside the body? No. We just took out the high and closed inside here. So we haven't done anything. Again, open, okay, low, high, close. Okay, we gapped lower from here. There's nothing to do inside here. You would need more information, and that is fine. But the easiest way to trade this is by waiting for these candle closures. These type of candle closures. We're in a key level. Remember, this is our monthly order block. Let me show you a few more examples and then we'll top it off. Took out buy side liquidity and the previous day high. Where did we close? This range. So what does the next candle do? Even in small ranges, open high, low, close, open high, low, close. Okay. More information needed. Okay. So this low got taken and we close inside the body, but it's not in a key level. Remember, we're only looking for key levels. You don't do it anywhere. Okay. So like when we get expansion theory here, this isn't expansion theory because there's no key level we're trading from. This is just a consolidation and we are bearish on the higher time frame. So you let this pass us by. You know when this happens, there's no sell setup, so we ignore it. Look what happens here. The previous day previous day high gets taken into the monthly order block once again. So where do we close? The very next thing you're asking yourself is where do we close? Well, we closed inside this candle's range. Open, high, low, close. Bit of a choppy day. You might have took a loss. You might have missed it. Open, high, low, close. The next day provides it anyway. This candle and this candle are all you need. Okay? Sell side liquidity. Sell side liquidity. Remember, we're aiming for obvious targets. Low hanging fruit targets. Sell side liquidity or buy side if we were reversing it. And a discount or premium array. So once we've taken out some sell side liquidity, we wait for more information. This candle expands. Do we close inside here? No. Wait. We expand lower and we expand lower and we continue lower. You would have missed these. What does this candle do? Take out the high, closes inside it, the next two candles expand. Take out high, close inside it, next two candles expand. Okay? As long as there's a key level and there's some framework, this will pay off as long as you do it right. So with that being said, that brings us to the end of the video. If you did enjoy, please check out the top link in my description, which is access to my mentorship. Okay, every day I'm inside my Discord group, calling levels and calling trades. Just the other week we had an 11 win streak. Okay, now you can see in there we do this every day and every week. I am teaching them to become actual traders, exercising patience and discipline. If you are interested in that, check out the top link in my description. Okay, and as always, I want to thank you for watching. If you did enjoy the video, like and drop a comment. Okay, drop a comment saying expansion theory. Okay, if you made it this far, let me know by commenting expansion theory. With that being said, subscribe if you're new, and I will catch you in the next one.